right, let's move on to our guest on the show. Himanshu Srivastava from Morningstar will be joining us right now. Himanshu, hi and welcome on board. Just want to start with we're finally at the end of the first 6 months of 2019. A lot of action has taken place in the markets. If you see the first half of the year, lots has happened. In the midst of this, the equity markets witnessed a turnaround in the FII flows. Now, how would you recap the first 6 months firstly, and what led to the FIIs make a comeback to the Indian markets after exiting last year?
Well, it has been a fabulous year so far. If you see, it was not a good start. In the month of January, FIIs were exiting Indian markets. They were net sellers to the tune of $600 million US. But what changed in the month of February, March and April when the category, when the FIIs came in with full flow is largely given the global factors were conducive. A lot of central banks across the globe adopted a dovish stance towards interest rates, and that actually led liquidity into the emerging markets, and India also benefited from that. Post-April, it was largely in the month of May, although in the initial part of May, there was a slowdown in FII flows, largely because of investors want to wait for election results to be announced. But once the election results were conducive, it was on expected lines. We again saw FIIs coming back into the Indian markets, and they invested 1.1 billion US into the Indian market in the month of May itself. In the month of June, although we are witnessing a slowdown, that is expected because election euphoria is behind us, and now it's more on the data side, what is the government's roadmap towards bringing economy back on track. So there has been a slowdown, but it still is positive, and I think this trend should continue. So far the year has been good despite domestic headwinds. We have seen the month of February geopolitical tension, despite uncertainty on the political front in the first three or 4 months. The FIIs have made a comeback into the Indian markets. So I see a positive trend, nothing negative at this point in time. I think, but what would drive flows going ahead would be the roadmap, would be the structure that the government is going to take in terms of bringing economy back on track and handling fiscal deficit targets.
Now, is the trend in India focused offshore fund space improving according to you, or are there any visible signs of improvement that you're identifying right now? Because it's been a long time this category of funds has witnessed net inflows. So is that a trend likely to sustain? What are the factors that are propelling this traction?
So that segment has a bit of disappointed. We have expected some more money coming through India focused offshore funds. Although India focused offshore ETF, which indicates short-term money, has started seeing net inflows in the month of April and May, but the overall category, it continues to be net outflows. However, the quantum has come down significantly from say $400 million US to around $75 million US. But India focused offshore funds continue to witness net outflow. Although it's been range bound, it's not really a significant amount. But yeah, we expect that segment to again get back on track. We are seeing changes happening. We are seeing a turnaround, given the quantum has definitely come down. But yeah, there's more that we expect from this segment to get more money. That is long-term money. That is how we judge whether long-term money is coming into India or not. When India focused offshore funds start getting net inflows. This segment will also link to domestic developments, So I think once there is a much more clear idea as how the government walk the talk, what is the roadmap, what they are planning to do in terms of economic growth, fiscal consolidation. I think that is when we see even India focused offshore funds start to get net inflows. As of now, it's continued to be negative, but the quantum has come down significantly, and that is positive.
Has there been any major changes in the portfolio of India-focused offshore funds as well as ETFs, and how is their portfolio positioned now?
So there has been a change in terms of market cap breakup. So large caps, typically India focused offshore funds have been dominated by large cap stocks, but there have been times when they have taken tactical bets in mid and small caps. So but in the recent times the large cap exposure has gone up significantly, say from 69% in the month of Jan to 74% in the month of May. However, on the sector front, it continues to be the same. There's not much major change. Financial services continue to dominate the portfolio, although allocation has come down from 29% in February to 24%, 26% in May, but it continues to dominate the portfolios, the top sector. The other sectors are technology, consumer cyclical, consumer defensive, and basic materials. Broadly, if you see the structure, obviously it's large cap focus, so there's there's safety that they attribute to. The other thing is, on the sector front, you can clearly make it out that they are targeting at economic growth to benefit. Once economic growth happens, their portfolio will stand benefit from that turnaround. So that is how they have sort of structured. Technology is a play which I believe is more on the currency side. That has worked well for these funds in the last year, and that is where we see a lot of traction in the technology space as well. Healthcare and communication services are the two sectors where they are not really building exposure. The exposure is really minimal given the headwind that these two sectors are facing.
Okay, Himanshu, great chatting with you as always. Thank you so much for sharing with us your perspective on the fund flow trend and how the market is likely to shape up going forward as well. Let's move right on to